Hello, everyone, and welcome to the Immutable Holdings Weekly Roundup. My name is Billy Baxter. I'm the head of corporate development and operations with Immutable Holdings, and I'm also here joined with our founder and CEO, Jordan Freed.
Hey, everyone.
So as part of this series here, we're doing a kind of roundup of what's happening in the broader digital asset ecosystem, along with sharing some of the updates from Immutable Holdings. So to kind of kick things off here, Jordan, before we dive into anything around the digital asset like ecosystem, I would just have to say this has got to be one of the most craziest weeks that I've encountered over the years of being involved with crypto. What do you think?
Yeah, I mean, there's there's really not too many ways to spin this week. I think it's pretty safe to say that we've had easily the worst week in crypto history. That is now just behind us. We're still digging out from this, Billy. I've taken calls with some of our top investors, some analysts. We spoke with some banks this week, and especially important, our team. Reassuring our team, our customers, our community of users about the situation in the market. I think we'll still be digging out of this for some days to come. We just saw the second largest cryptocurrency marketplace in the world declare Chapter 11 bankruptcy. And their CEO, their brilliant young CEO who clearly made a few missteps, perhaps even more than a few, resign. So our space is hurt. I think it's going to take some time to build back some trust, but I am happy to report, and I know we'll get into this on this call, we are in a strong position. Immutable Holdings has a strong balance sheet. We are very confident in our people and our balance sheet to be able to execute on our business plans.
Awesome. So I guess good time to dive in here, and you kind of already touched upon it. So I think the biggest news and the biggest headlines of this week was and as you pointed out, the announcement of FTX filing for Chapter 11 bankruptcy in the US. This is where we're at as of Friday, but obviously it was a really long week with different events, taking place almost every single day here. So kind of before we kind of dive in and give some of our kind of like commentary there, do you want to just maybe kind of run through what kind of took place, basically what panned out over the weekend, and then ultimately led us to this point on Friday?
Sure. I'll do a quick brief history on who Sam was to our industry, and then, of course, Binance and CZ, because they're the two most important players of this past week. When I first met Sam, Sam was a trader at Jump Trading. He was a quant and algorithmic trader, and a pretty good one at that. Sam quickly rose to fame and fortune in crypto by taking advantage of the famous kimchi premium. And Billy, you'll remember the kimchi premium. Yep. This was the price premium that Koreans would pay for Bitcoin, which in many days could be as high as 20 or 25% above the price of a Bitcoin in other parts of the world, like the US. To Sam's credit, Sam left Jump, formed Alameda Research, and with a pretty conservative balance sheet, was able to figure out how to buy Bitcoin in the US and sell it for 25% more while getting the money back to himself in the US, and was able to do this to the tune of exploiting that premium down to zero. That premium no longer exists, of course, and making himself a handsome fortune, reported to be in the billions of dollars. During this time, Sam, at any point in the market, was making up, 5 to 10% of global crypto volumes. And Sam said, well, hey, I'm providing all of this liquidity as Alameda to the top cryptocurrency marketplaces in the world, Liquid and Huobi and Bittrex and Binance. And Sam, as an entrepreneur, said, I'm going to start an order book of my own, and I'll use this firm, Alameda Research, to provide liquidity for that. And that's what became FTX.com, this global, international, no US users due to regulatory restraints. FTX US came later and started FTX. And FTX got pretty good at, building a performant order book, user acquisition globally. It's a great 3-letter domain name and a great brand, and it grew quite quickly. And as did Sam's fortunes. Sam at the peak of this past cycle was worth tens of billions of dollars, largely due to equity valuations, a lot of money. About a year ago in October of 2021, we saw FTX raise money at a $25 billion valuation, right? I think they raised $420 million from firms like Temasek, right? The Singaporean government, from Sequoia, from, Orlando Bravo and Thoma Brava, from, some of the top investors in VC firms in the world. It looked to be a safe bet from the outside. Of course, over the past couple days, we've seen several things play out. And again, we're still barely learning all the information. And I'll try to just summarize this now and keep it short. Essentially, what we saw happen is we've learned that FTX tried to buy Binance out. Binance was one of the original investors in FTX after all. Apparently, that buyout deal was a combination of cryptos, but included mostly FTT, reported to be over $2 billion worth of FTT, giving Binance this, incredibly powerful position over the market of FTT, the native, platform token of the FTX platform. And we also came to learn that Sam was apparently bailing Alameda Research out of what likely was trading holes, Billy, from, Luna and UST and exposure to Three Arrows Capital and Voyager Digital. They were quite active this past cycle, I think we've come to learn. And FTT was used, unfortunately, as a means of collateral, borrowing billions of dollars worth against, FTT. Of course, we know what has happened. Sam and CZ had a series of conversations. Binance entered a non-binding term sheet to buy FTX. That did not play out. Clearly, Binance started selling their FTT position, tanking the price of FTT. This left Sam with, diminishing options and places to turn. He's clearly under collateralized on his billions of dollars in loans. And we're learning over the past couple of days that these shortfalls and this loan that FTX made to Alameda was using user deposits. And that there's now about a $8 to $10 billion shortfall that we've seen. Now, many are affected. Mike Novogratz, Galaxy Digital, just reported the last couple of days that they've locked $75 million they have locked in on FTX's platform. We've learned that BlockFi has stopped user withdrawals temporarily over the past 24 hours. We'll see how this plays out, because FTX was supposed to be the one bailing BlockFi out and guaranteeing deposits there. And there's really just this systemic, unfortunately, breakdown, because so many depended. There's a lot of firms I've spoken with that had FTX as a Series A. Those deals had not closed and funded yet, committing, $20 to $30 million. Scaramucci today is announcing that he's trying to buy out FTX from their 30% ownership of Skybridge, I just saw. So this is a fascinating time, Billy. We are very focused on executing in our business. I've been tempted at various different points to just sort of block SBF and FTX and FTT as keywords from my own Twitter feed and my own LinkedIn feed. But I've opted not to do that because I really do think it's important that we talk about this. I think it's important as an industry that we understand what happened, we learn from it, and we make sure this never happens again. If you are working in crypto, you need to understand what has happened. Or if you're investing in crypto, you need to understand what has happened, because one, we've learned, do not keep your crypto assets on cryptocurrency exchanges. Do not keep them on a Celsius. Do not keep them on a BlockFi. Do not keep them on a Voyager. Do not keep them on an FTX. Don't even keep it on Coinbase or Binance. Store it in your own wallet. This is the most important lesson, and too few investors understand that. And then two, we need to have better rules and regulations around what these exchanges are doing with user deposits. We need to have Merkle tree style proof of reserves where we can actually see where the reserves of these exchanges are. And more importantly, if you're issuing tokens in the market, we need these firms, these token issuing institutions, to not use those coins as collateral. We saw this in the spring with Luna creating a stable coin, UST, collateralizing Luna, to back that stable coin. And unfortunately, the same thing happened here with FTX. So
Yeah,
it's been a hell of a week.
totally. And some might say that this might not be the end of it. As you kind of pointed out, there was a number of firms that had exposure to FTX. The liquidity crunch basically means that people that had deposits on the exchange can't get it off. So I'm sure this is not the end of it. And then more importantly, I think there's also been some stories been circulating, or like some reports from like Wall Street Journal, et cetera, that regulators are also taking a very close look at all the happenings here. And then while FTX was an international exchange kind of outside of the realms of US jurisdiction, it's good likelihood SEC, CFTC are probably going to get involved.
Absolutely. And, I, for one, and Immutable has always taken the position that we welcome regulation into the space. What we need now more than ever is clarity. We need people to understand that, blockchain as a technology and crypto is here to stay. Fundamentally, the world is so much better now that we have internet native forms of money and means of exchange, and that we can conduct an online economy with this vehicle. And I think that is very exciting, and the economic opportunities of building businesses, even like ours, like NFT.com, around that will remain. I do think that there's a period that we will have to get through where we will have to put regulation in place. We'll have to work proactively to make sure that investors are protected. But moving forward, I'm very confident that we come out of this even stronger than ever, as we have every single cycle, and not just crypto cycle, macro cycles. You have bubbles and you have bursts, and we will build back from this one. And I'm very confident in new Bitcoin all-time highs.
Yeah. And also too, you can say sometimes when there's a major failure like this, like what we are seeing right now with FTX, it also presents itself a lot of lessons learned. So if you're a connoisseur of history and around financial markets, a lot of the stuff that took place in the early 1920s led to what we have now with the 1930 and 1934 Act that brought about like the SEC. And then also, if you look at recent history with the global financial crisis in 08, basically brought upon Dodd-Frank and other kind of regulations around the world that ultimately made banks kind of more secure, helped them bring in more increased capital requirements. And part of the reason we haven't heard about any bank failures, while we lived through, COVID, and then also the craziness that's happening right now in the markets, just because those banks are now really well capitalized. So I guess, that's kind of TradFi, but when we look to, kind of DeFi, digital assets, there's probably a good likelihood there's going to be a lot of great lessons learned out of this, and hopefully making the industry much more safe and secure going forward. So I know
absolutely,
we're not going anywhere.
And we'll be better for it. I think in times like this, you always look for the good that'll come out of this, right? It's unfortunate what has happened, but the good that'll come out of this is that we will have more regulated cryptocurrency exchanges. And I welcome, again, that clarity. There should be a nationally recognized banking charter applied to cryptocurrency exchanges that protect user deposits. And I don't know if that's FDIC insurance. I don't know if that's a proof of reserve or a proof of collateral, but simply put, no exchange should be in a position to be as cavalier and loose with user deposits as we've seen Voyager, as we've seen Celsius, and now as we've seen FTX and some others in the sector. So these are the big examples. We have 3 great lessons to learn from. We now need to work with regulators to put those protections for users in place. And speaking as a user of marketplaces, of course, I don't keep my funds there. I only trade there temporarily when I need to. I am very supportive over this, and I welcome conversation with regulators, many of which we actually are fortunate enough to be in a position to have.
Yep. Well, hey, Jordan, really thanks for those insights and to kind of giving a breakdown about the whole situation there. So I guess kind of shifting gears here and kind of looking internally to Immutable Holdings. Do you want to just kind of comment about, where we stand throughout this, this past week and just in the market more largely?
Yeah, absolutely, Billy. I'm very proud to share with all those listening. Immutable Holdings took absolutely no exposure to risky crypto assets like FTT. We have no exposure to the equity of FTX whatsoever. And of course, no exposure to Alameda, either as a counterparty or firm that we've ever worked with. I have had the fortune of meeting Sam. I do think he's a brilliant individual. It's a real shame what has happened to him, and I feel for him. And my thoughts are with him going through this, really um, difficult day. But we witnessed several missteps. Sam's going to have to take responsibility for that. We're going to have to learn from that. So my thoughts are with him, and obviously the various different stakeholders of that platform. I hope that there's a meaningful resolution that comes out of it soon. But from Immutable Holdings perspective, we have a very strong balance sheet. We have enough capital to not just get through 2023, but well into 2024 and beyond. We are very excited and confident about the businesses that we are building, as well as the people that we get to build with. We have a fantastic team. We have a great ecosystem of investors. I'm on my way to our annual in-person board meeting, which will take place, in the middle of this month, middle of November, which is next week, effectively. I'm very excited about the opportunity that we have to prove during this cycle that we can come out of this stronger than we ever have before.
That's awesome. And I guess, Jordan, you touched upon this, but I guess anyone that's listening here, there was a press release that we put out on Thursday, November 10th, that kind of memorialized this. And then also, if people are following, Immutable Holdings in the next couple of days will be releasing its Q3 financials. So if you want further information on that, you can go to www.sadar.com and look up Immutable Holdings issuer profile to find that information. Or you could also go to our website, www.immutableholdings.com/investors, where you can, get directed to our corporate profile and be able to look at our financials and periodic disclosures there. So.
Sure. And if you're listening to this too, I'll offer up, you can even email me directly at jordan@immutableholdings.com. I'll put you in touch with the right person in our organization. We continue to be grateful for the support, Billy. We have to acknowledge the people who have supported us, who maintain their positions in our business, our shareholders, our users, our partners. We are very, very, very grateful for all the support that you've given us. This is going to be a difficult period, I think, for crypto in general. And we are extremely proud to be in the position that we are, to be almost, I believe, Billy, somewhat of a guiding light to the rest of the industry for how you protect a balance sheet. We capitalize when we needed to, and we will be able to continue building for the next few years, so we can come out when that Bitcoin rally comes. And I feel for our investors, they deserve a bit of a prediction. We are very optimistic that, around the next Bitcoin halving event scheduled now for, when the block reward will effectively drop in half around spring of 2024, we feel pretty confident that there'll be some very exciting price action again in Bitcoin. There remains amazing institutional interest in the asset, as well as in the industry. And again, we're really well placed to capitalize on that.
Definitely. Well, hey, Jordan, I think this brings us to the end of this roundup. Really appreciate you taking the time to speak with us, and thank you all for joining us. We hope you find these recaps to be helpful, and looking forward to keeping you guys informed and what's happening around the world of digital assets.
Yeah. One more quick note. If you are getting value out of this, or if you have questions you want us to answer in these, be sure to email myself or Billy. It's our first names at immutableholdings.com, or leave a comment wherever you may be watching this video. And we really appreciate your feedback. So thank you for tuning in, and thank you for your support.
All right. Have a good one.